What's going on, everybody? Welcome to the video. In this one, I found a penny stock that is just incredibly undervalued. Like, this isn't something that I expect to just blow up due to some major catalyst. I expect the market to find value in this one, and it could be absolutely incredible. So the ticker for this stock is LIZI. They are a Chinese company, so they are an ADR. But if you do enjoy this type of content, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any future videos. Let's go ahead and get straight into it. So the stock right now, as you can see, trades for 63 cents a share. Very volatile, as most of these penny stocks are. I believe this company has a float of about 22 million, so it's not the highest, but also not the lowest. Trading right on the 50-day moving average. RSI is pretty fair value, and the MACD seems to be kind of turning around, especially with this big green candle. The stock today is up alone 6.7%. Was up at a certain time. Actually grabbed it wrong. Was up at a certain time 12% today. There's some news passing around. I mean, you can just see it right now has a market cap about $25 million and a PE of 3.55. If we look on FinViz, has a forward PE of 2.32. Earnings per share this year increased by 52%, and earnings per share quarter over quarter increased by 151%, which is incredibly high. Let's go ahead and show you a little bit more about this company. Market cap on Yahoo Finance is about 31 million. So it is a small company. Earnings per share over the trailing 12 months have been 14 cents per share with a trailing 12 months PE of 4.43. All this data is a little bit different from Yahoo Finance to FinViz to Google Finance, but still, this is a huge undervalued company, especially compared to its industry in the media and entertainment industry. So this is a Chinese company. I will just kind of show you a quick overview of what they do. So they operate as an audio entertainment social networking platform in the People's Republic of China, provides podcasts, live streaming, audio entertainment products. They have a ton of different apps and things like that. So we'll get into that deeper in a second. But I think it's important that I show you some very important things about this company before we get into who they really are. So first up, they have an absurd amount of cash. Now, this is all in Chinese yuan, but right now it's about $617 million that they have in cash and a cash value per share of $12. Okay, convert that. That's about $88 million in cash for a $25 million company, which is huge. Okay, so that's just a little seek of value. And then 12 Chinese yuan, that's $1.72 per share in cash, and they trade for 63 cents. Another thing I did want to point out on this was it's not like there's some huge skepticism happening per se, because if this was something that just could not be that good, the short interest would be high. And now I'm not saying just because the short interest is low that it means the stock is a good stock. You have to take investments and you have to do your own research. Don't just buy because I'm making a video about it. But this is pointing in very good directions. They are a profitable company. I'll show you this article real quick, which is pretty important. Lizi is looking to continue growing its return on capital. If you don't know what that is, measures the amount of pre-tax profits a company can generate from the capital employed in its business. Here's a little formula: EBIT divided by total assets minus current liabilities. They right now have a return on capital employed of 12%, which is better than the entertainment industries of 8.4%, which is also very good. And then I kind of wanted to point these two things out. Generated losses for 4 years, but it's now got 12%, which is very good. Not only that, utilizing 354% more capital than before. That's expected when a company is trying to break profitability. We like this trend because it tells us the company has profitable reinvestment opportunities available to it. And if it continues going forward, that can lead to multi-bagger performance. So that's a big word. Multi-bagger performance could be very good. Long story short, we're delighted to see that Lizi's reinvestment activities have paid off and the company is now profitable. And since the stock has fallen 66% over the last year, there might be an opportunity here. So I want to show you more on this company. First up, 58 cents right now. It's about 63 cents right now. Undervalued by 94.46 compared to Wall Street Zen's DCF modeling, and gives them a price of about $10.48. That's huge. And good value, it's got a PE of 2.9 compared to the market average of 20.37. That's huge undervalue. But let me show you a little bit more about this company, and then we'll go into a presentation that I believe has some really important things. Lizi is dedicated to bringing people closer together through videos, created a comprehensive audio-based social ecosystem with a global presence. Company aims to cater the user's interest in audio entertainment and social networking through its product portfolios, envisions an audio ecosystem where everyone can be connected and interact through voices. So this is a pretty big company. I think another reason as to why they have fallen so much over the past few days and just kind of recently is the fact that they are a Chinese company, and China with COVID is still dealing with a lot. There's a lot of big news happening right now about quarantines in China and traveling and things like that. And I do think that macro factors are affecting this company, but sooner or later, the market will find this value. And as long as this company is not like doing anything incredibly terrible, I do think there is upside potential. But remember, I could be completely wrong. There could be a reason as to why this company is trading so small. But let me go ahead and show you a presentation that I believe was very, very important. So they achieved profitability for the fourth consecutive quarter, reached record highs for both revenues and net income. Right now they have about 476,000 average total monthly paying users. That was as the most recent quarter. Then a financial overview. Year over year and quarter over quarter growth, both very high in net revenues. This is in RMB. We kind of do that translation. That means for this past quarter, they made about $81 million in US dollars revenue, which is a very, very big sign. Gross margin, 33%, non-GAAP is 34%, looking like a very solid company. To show you a little bit more, we'll just see operating loss or income margin is 2.2% for the third quarter, non-GAAP is 3.6%, and their net income margin is 3.5%, and non-GAAP it's 4.9%. Very good numbers that I'm really liking to see. So as you can just see from Q3 2021 all the way over, total net revenues is increasing quarter over quarter, year over year. Gross profit is as well. Net income is as well. These are all very solid numbers. And total assets, they have a ton of money in assets compared to liabilities, which is another key indicator that this could be a huge value play. So currently, I am not invested in the stock. I found this not that long ago. I found it today. And I'm going to just continue to kind of watch it. I don't really want to just throw a ton of money into a stock that I've only looked at for an hour or two. But, I think this is a good company per se. I'm not saying it's the best company that you need to throw money into it. Do your own research. Be smart about it. But thank you for making it to the end of this video. If you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future updates and future videos. Check out my Discord server. Links in the description down below, as well as free stocks. Everybody loves free money. Go get it while you can. And I will see you in the next video.